Welcome to the Las Vegas Real Estate Report, a 2024 recap with a 2025 forecast. In this video, I'm going to cover December Las Vegas key housing stats, show you what happened in 2024, talk about what might be happening in 2025, talking specifically about interest rates, which are continuing to hover around 7%. What's everyone saying there? The opportunities continue to be, if you're thinking of purchasing or maybe selling and buying around new home builders due to the incentives, including special financing programs. Going to cover all of that today. My name is Jan O'Brien, along with my co-team leader, Cosmo. We're a team of professionals at Simply Vegas. You can follow us here on YouTube. We're on TikTok and Instagram at Living Las Vegas Henderson. This is a great team of professionals, experience covering all parts of the Valley. Make sure you reach out to whoever might have sent this video to you. So let me dive in. I've got the December stats over on the left and the annual great comparison since 2015 of what has happened here in the Las Vegas real estate market. Well, 475 ended up the year, December 2024. That actually came down $5,000 for the median sales price. However, it was up 5.6% year over year. We were up 19% year over year for units sold, also up year over year. These plus and minuses are all year over year for December, comparing to December 2023. 1,754 new listings, 4,965 available homes on the market as of the end of December that did not have an offer on it. That brings us to 2.7 months of supply, which is up about 10%, meaning that if nothing changes in the market, the same amount of properties with the same demand, properties go under contract, all come onto the market, there'd be 2.7 months of supply before it was all zeroed out. This is just a great comparison of things. Condos are on the bottom here. I'm just reporting on single family to just get a sense of 2015, the number of units sold, where you can see we really were up high here around 35,000, even in 2021, which is coming out of in the pandemic years where the prices went soared. This is where we saw record sales, 38,690. That compares to 23,740,000 sales in 2024. That just means units, single family units sold. You can also see how 32,000 listings that came onto the market was better than 2023, but down from 2022. 2021 basically all the way through since 2015. Here's another way that I like to break the statistics down. This is just a monthly forecast, monthly report of the actual median sales price from 2023 to 2024. And you can see a bit of a pattern here. In 2023, we started out flat. 2022 in May is where we saw the height of the market, which was May of 2022, where we're at 482,000 sales price. And you can see we almost hit that this year, where we were right around 480 for a couple months in July and then in November. But you can see how we started out 2023 plateau about 425. The numbers bounced up, kind of stayed around 450, and we ended the year at 445. So then 2024 saw us being at 450. We continue to see the median sales price of single family homes climb until this 480, pretty much staying right in this 476 to 480, 475, popped up to 480, and we end the year at 475,000. Now here's one breakout of that chart, just showing year over year. Just gives everybody perspective that the median sales price back in 2012, specifically for single family homes, was 149, and you can see how this climbed. And then of course it was from 2020 to 2021, pandemic years, where we had those very, very low interest rates. This is where we went from 345 median to 425. Stayed the same for 21, 22, up to about 450, and now 470 for 2025. So what's going to happen as we're moving forward? Well, it is all about interest rates, which of course are driven by inflation, other economic data, what the Fed's doing. But frankly, it's really more about what's happening with jobs reports, other economic data, and inflation. So that is what we've got to see as we have a new administration coming in today, as I record this. This chart on the left is just showing you where the rates went daily, from 1220 all the way to 117. So you can see they've been right in the 7.04. We hit a high of 7.25. I'm just looking at conventional, and this is a fixed interest rate conventional loan, no points, no discount points, and we're hovering around 7.08. So what's going to happen? Well, we're going to have to watch the economic data as we always do. These are the 2025 and 2026 forecasts from one of the biggest MLSs in the country, Fannie, the mortgage bankers, home builders, National Association of Realtors, Realtor.com, Wells Fargo. So you can see they're all year end. The year end date is these little asterisks, but an annual average of somewhere between 5.9 and 6.4. And then maybe staying on, maybe going a little lower. And I kind of agree with this. I think we're going to actually stay up here in the sevens for a little while till we see what's happening with inflation. I don't see us getting below that 5% interest rate for a couple of years. It just really depends on what happens month over month with the economy, with inflation, with how the markets react to that, the T-bills, the 10-year treasury, and so on. So stay tuned, and this is something we'll do every single month and keep you updated on what's happening and where the opportunities are. So let's talk about where the opportunities are. If you're considering buying, this continues to be the scenario for the last couple of years because our rates have been in the high sixes up to 7% for really 2 years now. The inventory slowed down at the end of the year. That's typical, that we don't get as many homes on the market November, into December. Saw a little uptick with that. But the bottom line is people are locked into their interest rate, meaning the majority of sellers that have a home just don't want to give up that 3.75 sub 4 interest rate to trade it off for a 7, even though I'm going to show you some opportunities with new homes. So that being said, I believe that many, many homeowners across the country here in Las Vegas, and just talking to people, everyone's waiting for the rates to get low. Now, as time goes by, what is lower? Lower is, in my mind, is probably around 5.5%. I think if people can see a 5.5% and they had 4.5 or somewhere, maybe 3.5, 3.75, they could probably deal with that. So the challenges with this whole thing is if everybody's waiting on the sidelines for the interest rates to go down, there is this massive pent-up demand of sellers who want to sell and buy something new, buyers who've been waiting for those opportunities to come down, when the reality is there are some opportunities right now, because when and if we ever get to that place, again, I'm thinking, a couple years from now, it just depends on what happens in our economy and with inflation and so forth, as I continue to reiterate. But everybody jumping back into the market, because the rates finally get in the fives, and there's not enough inventory, the opposite of what we have right now is going to happen. We're going to get back to bidding wars. If there's not enough inventory for the pent-up demand, we're going to see prices go higher. Everyone's going to be happy about an interest rate, but you might be overbidding for homes, okay? So currently, there's opportunities out there. There's not as many homes as there would be in a market where everyone's wanting to sell their home. However, there's opportunities to negotiate with sellers. The opportunities are really with the builders. That's what has been happening for the past 2 years. Here's what I'm talking about. This is just a snapshot. The incentives change on a weekly basis for the builders, and the best opportunities always come with builders who have inventory, quick move-in homes that they need to move. Now, we have about 215 new home communities amongst numerous builders all across this valley. Here's a quick snapshot showing that. And then we're seeing things like a buy down, right? This is a 3-1 buy down on properties through Lennar right now. This changed a little bit from last week, but just as a snapshot, it always comes with stipulations. There's so much down. This is for a conventional loan. You got to put 10% down. You have to go under contract, and you got to close by the end of March for this. But every week, there's always something that's available, and this is why reaching out to us, we are new home specialists. We know where the deals are. We can sit down and counsel you and show you what the numbers will be. I have an example of something like this coming up, but you can even find incentives where builders are lowering prices, offering $30,000, $20,000 in what's called flex credits, which you can use to buy your interest rate down or cover closing cost, okay? So let me give you an example, okay? So here is an example of a home. I'm just going to give you the scenario. The home price is $639,000. This is a conventional loan, 10% down. Those are all the regular factors. The only thing in all four of these examples, the only thing that's changing is the interest rate. So right here, 7.125 with 10% down, which is 63,900. The total house payment, this calculator figures out principal, interest, taxes, and insurance, and we're putting in $126 monthly HOA master plan fee over here. So that's $48.43 for a 7.125% fix. Okay, so now let's compare that same home. Okay, this is actually a new home that we were looking at. A new home with a 3-2-1 buy down, and I'm going to use 3.25, 4.25. That's the first year. This is the second year. And then how this 3-2-1 buy down works is the 5.25% will be what the fixed rate is year 3 through 30. So for year 1, the APR is still higher. The APR is calculated at a the APR that would be on the 5.25, but your payment would be 35.1187, all with the same variables, 10% down. It's just that at a 3.25, where we use this calculator, which doesn't quite accurately figure this out. So we're just being very conservative here. So just stick with me. 35.11 versus 48.43 if you went with a fixed interest rate. Year 1, 35.11. Year 2, it goes up 1%, 38.40. And then in year 3 through 30, you're 41.89, which is a little $650 savings, even when you get to the fixed rate of 5.25. Okay. So just wanted to be able to show you an example of how powerful being able to get the interest rate down, which is what builders are offering. So the cost of doing this buy down is completely on the builder. You got to use their preferred lender. You're not coming out of pocket for that buy down. You may end up having to pay some of your closing costs. There's various ways that we can negotiate where we can maybe get you a 2-1 buy down and get some of your closing costs covered. This is what we know. This is what we want to be able to talk to you about in a one-on-one conversation. Everybody's goals are different. Now, seller opportunities. I've been saying this for months now. You can certainly wait until the interest rate decreases and the buyer demand increases, which will be great for you as a homeowner because maybe there'll even be more bidding wars, right? But the reality is, if you're considering buying after you sell, you can't have the best of both worlds. Many people feel like I'm going to sell high and buy low. Okay. So if you wait till it's more of a seller's market because there is, not as much on the market, but tons more demand than we currently have. Yes, you might be able to get top dollar, but now if you want to put your buyer's hat on, you have to go negotiate and maybe be outbid. And so, it's very hard. You can't time the market. No one has a crystal ball. I don't have a crystal ball. No one does. I'm just reporting on what the facts are now, what we're anticipating happening in the coming months. So there are definitely opportunities for selling and buying now. We helped several homeowners last year locally who we sold their home for them, and then we helped them get into a new home and make a smooth transition. So you just got to reach out and talk to us, and we'll be happy to sit down and help you in a one-on-one situation. So that is it for this edition of the Real Estate Report. Make sure you follow us on the various socials. We'll keep you updated. We post a lot of video tours and what's going on with the builders, market updates, areas to live, talking about resales and new homes, specifically on Instagram Reels and on TikTok, also on YouTube Shorts. Until next month, that's it for now.